Hey, morning, folks, and happy TGIF to everyone. Hope everyone's doing all right. A really quick wrap here. Before I get on, remember to hit that like and subscribe button and the bell icon to get notified on future videos. So our head of trading is not in today due to personal matters. We are looking here on the dollar index futures daily chart. Well, I'm showing this because basically this is pretty much the main driver of how things have traded so far. And when I say the dollar index, I mean the Fed and their hawkishness, and whether markets are expecting the Fed to go further into hawkish territory or not. I've explained a lot of this, not a lot of this, in very concise detail in the morning read, which you can find on the Dun Capital main site. As you can see here, we are trading firmly below this supportive trend line from that goes all the way back to February this year, and I've already mentioned this a couple of times basically. So 104s are still holding at this point in time. We're seeing a floor getting made there, so that's a 2-day bottom at 104.5. So if it does go back there again without trading back up to 105.5s, I would think markets will lead well going into the week. Next week, I don't think it's going to do it today, but if it doesn't trade above 105.5s, we might be looking at a retest of this, and then some consolidation of some consolidation price action basically before either breaking below to test further 103.5s there and thereabouts. Obviously 104 handle coming into play at some point. Crude oil is trading back up into positive territory, trading about 94s. So yesterday's high was not, we traded 95s, and this is all due to supply disruptions, and also, with the Fed not, with the market not thinking the Fed's going to further, hike 75 basis points, and obviously like 100 basis points is completely out of the picture at this point because, as you can see, inflation is coming back under control, and basically we've kind of, in a way you can call it, we've hit peak inflation. And due to this fact as well, that softer dollar also helping equities ramp back up. We are trading well below this 4,200 level, and also which is the year inflection there and thereabouts. So 4,200 handle is just slightly below there, and this is the low print of end of January, mind you. So big inflection level here. We are holding above a retest of that. I wouldn't mind taking that long with a stop below the 4,200 level. That is quite a big stop, but depends on your basically risk parameters on whether or not that trade makes sense. So today we had UK GDP data, came in better than expected, but still soft, very soft compared to the prior read, which is why you can't see much in terms of price action on that GDP data. But what is interesting here is prices are still capped below this 5th of May low print, right? A very clear line in the sand, and also look at these support slash resistance levels that have come into play. We trade below here. The next point to test would be the 0.2073s. Look at that, the excess, and which is a considerable level in this moment in time, because as you can see there, we are seeing very strong buying from this area. So it dips below, doesn't test 1.2s, close, but it didn't, and then just goes back up. So if it trades below, this would be a great buying area, but if it trades further below, I don't think this low here at 1.2 handle is going to hold. I think we should be looking at 1.1962s to get tested before buyers come back in, basically. So pretty much confirming this range over here that we're seeing. So that's pretty much it. Any questions at all, just hit me up. So today, later on, about 3 o'clock GMT, we do have Michigan sentiment prelim numbers which are coming out, and that it's not going to be super exciting, but you might be seeing some quietness in terms of trade before the number hits, and then so we're expecting the number to improve basically. So in terms of consumer sentiment. All right, this is Ray bringing you the daily briefing. You guys stay safe out there. Don't take unnecessary risks and have a good weekend. Cheers.